What's going on, Savage Life family? Today I'm going to teach you how to leverage margin using Robinhood Gold for a weekly profit. So before we hop right into the video, smash that like, subscribe, and comment down below, and we'll get right on. Alright, so looking at the news, Donald Trump did confirm we are getting another stimulus check. So it has to go through the Senate, I believe, and when it passed through the House already, I'm not quite sure. But definitely confirmed by the president himself. And he wouldn't want to lie about this. The economy is plummeting and we need the money. So guessing the $1,000 that we will be receiving, if you are an investor like I am, you will be sticking it into your portfolio. And with the $1,000, if you do get Robinhood Gold, they are going to give you another $1,000 in margin, which you can use to either, like my last video, buy the dividend stocks to get monthly $13, or a little riskier play is trade options, where you can make weekly income and have your money work for you. So I'm gonna go ahead and teach you how it's done. And for this video, I'm gonna go ahead and use LB as an example. LB is a company that owns a couple retail companies like Bed Bath and Body Works, whatever you want to call it. Victoria's Secret. Okay, so I'm sure you heard of them. They were founded in 1963. And they currently have 94,000 working employees. It was at 100K, but amid the coronavirus pandemic, they had to lay off a lot of employees as well as close a lot of stores. So they closed 250 stores in the US and Canada, which caused the stock to plummet. Now, sorry about that. At its peak, L Brands was at $96 to $100 at its peak, and over a 5-year range just started plummeting amid all the lawsuits and allegations, especially since Netflix did come out with a Jeffrey Epstein documentary. It explained how they had a lot of sexual allegations going on and sexual trafficking, and how they were connected to Jeffrey Epstein in that case. So despite all of that, if you could go ahead and take yourself to look past all those allegations and invest in this company here, we're gonna go ahead, I'm gonna go ahead and teach you a trick. Now with Robinhood Gold, you do get Morningstar, which they go ahead and review these public traded companies. Not all of the ones on Robinhood, but a majority of them, especially the famous ones and the well-established ones like L Brands. Now looking at Morningstar, they currently gave L Brands a 5-star review, stated that the fair value for this price is $26.50. Majority of the traders on Robinhood are holding it. 64% are holding it, 29% are buying into it because they're saying that this is a bargain price still, since it is at $15 and the fair value is $26. Okay, so like I said, you get $1,000 in margin with a $1,000 deposit. We're gonna go ahead and click on trade LB options, and we're gonna sell a put. So we're working with $2,000 here, $1,000 for margin, $1,000 that you deposited. So like I said, LB Brands is a bargain price since it is being sold under the $26 that was the fair value by Morningstar. So let's say you personally say, wow, $13.50 is a great strike price for me to buy into this company. Now when you deal with options, it's 100 shares at a time. So if you buy it at $13.50, you have to put down $1,350. We're just adding a zero to the 13.5, okay, because it's multiplied by 100 shares. Stick with me. Now if you're comfortable with buying at that price, you receive something called premiums, which is money given to you for creating a contract to buy at that price if it hits. Now premiums here, it shows 43 cents. Okay, so 43 cents per share. We're working with 100 shares here, guys. So that means you're receiving $43 instantly to your account once you create this contract. And if by the expiration date, July 10th, it doesn't hit $13.50, what happens is you keep your $43 and you receive back the money that you're leveraging, which is $1,350, which is $1,350. Okay, now let's say it hits $13 or it hits $12.50. Your contract, you're locked in at $13.50. So you have to buy that stock at that price, no matter how low it gets. That is the risk, but I'm gonna teach you a little trick around that. So let's say Wednesday, Thursday, you believe there is absolutely no way it's going to hit that price. If you want to lower your risk, you could lower the strike price that you're willing to buy it at. But for me, $13.50 is a great strike price to buy into L brands, because if it happens to go under $10, I believe over the long run, it's gonna skyrocket back up, the coronavirus pandemic. So you would click here, bam, fill contract, continue. You want to fill one contract. So the minimum credit you'll receive, like I said, which is the premiums, is $43. You made $43 in a week for holding your money to the side. So once you get the hang of this, you literally can make $40 to $100 a week with a $2,000 investment. Now there is gonna come a time where your contract fails and you end up with the 100 shares. What happens then is you go over to the call options and you do the same thing but on the opposite. So if you have 100 shares at $13.50, that is your average cost. You want to sell your stocks higher than your average cost. So if you were to sell a call for $14, you would make a $50 profit because of the 50 cents difference of the average cost times the number of shares, which is 100. So that's a $50 profit on top of the premiums you will receive selling the call, which here would be $133. So in total, it's the $47 plus the $137. So you made $230 in 2 weeks doing absolutely nothing, guys. A little bit of research, a little bit of risk, and your money is working for you. Now, this is something that they don't teach you in school. They want you to work for a company. Me as an individual, I want to work for myself. I don't like making other people rich. Of course I like making you guys rich, but you know, I don't like working for somebody to get rich while I'm sitting down eating the crumbs at the table. No, I want to work for myself. I want to have financial freedom. And this is a little tip and trick that I'm teaching you guys, that if you put your time and dedication to, eventually you can do this for a living. Okay, so we're gonna go over it one more time. You have $2,000, okay, to sell a put for a strike price at $13.50. You need $1,350 out of your $2,000. So you're using $350 in margin, $1,000 which you deposited from your stimulus check or whatever you want to call it. You're going to select an expiration date which is as close as possible. Of course, you're going to want to be doing this week by week. Of course, I select July 10th. I'm comfortable with $13.50 because the share price now is $15. So it would have to drop around $2 for me to buy at that price. And if it doesn't, if it shoots up to like $17, $18, I get my money back, which is the $13,350 that I put in, and I keep the premiums, which I keep $43 in my pocket doing absolutely nothing. And of course, if it goes down to $13.50 or less, I have to buy at that price, and I get 100 shares of the company as well as my $43 premium, so I got a discount rather than just buying 100 shares outright. So it's a win-win opportunity, guys. You could definitely profit using this little tactic here with your margin. And I know it gets a little confusing, so if you guys have any questions, drop it down below in the comment sections. And for a free stock, if you're not signed up for Robinhood, go ahead and click in the link description below and subscribe for more content like this. Okay? Have a good day.
Tell me pretty lies, look me in the face, tell me that you love me.